I've been trading prop firms for over a year now, where I've managed to get multiple payouts and secure my first ever 5-figure month. From blown accounts to random rule breaches, prop firms can get very confusing. But if you follow this video with me, I will teach you guys how to pass your evaluations, get payouts, and make sure you guys are giving yourselves the best opportunities possible to abuse these prop firms. Before we get started, I do want to mention that there will be timestamps down below, so you will be able to skip past and back through the video. And also, please take a notebook and write some notes because it's going to be very important. So let's get into it. How to trade prop firms in 2026. How do prop firms even work? This is one of the most important things you need to understand before getting into trading prop firms. How do they even work? First, you are paying to get evaluated. So you pay a small fee that is usually around $100 to $150 to get evaluated on your trading ability. Based on your trading ability, you have to pass the evaluation. Passing the evaluation based on rules of the evaluation, it's rules that the prop firm sets for you, and they are pretty strict. If you're someone who's never done it before, please read the rules of these prop firm accounts that you are buying before you buy them. It's very important. And then once you pass the evaluation, you get access to a funded account. You get access to a funded account where you can withdraw payouts based on your performance. It sounds very easy, but less than 20% of traders pass their accounts, and of those traders, only 10% of them get payouts. What are the pros and cons of prop firms? Why would you be interested in trading them, and why would you probably might want to stay away? Well, one of the pros is the leverage you get. If you pay an account for $100 and you get access to $2,000 of drawdown, you don't actually get access to that $2,000. You get access to like sim funded capital where you can use $2,000 to make profits, and once you make profits, that's when you could actually start withdrawing money. But the fact that you pay $100 to pass a hard evaluation and then eventually take that $100 and turn it into $2,000 of capital, that's leverage. You also are capped at the downside. Basically, you are capped at the downside of the evaluation fee. If I lose $2,000 and blow my account, I don't lose $2,000. I lose $100. Whatever I pay for the eval is what I lose. So you can see how that is a very, very profitable business model for both the prop firms and the traders, because some people will never get payouts. They'll blow their accounts $100, $100, $100, while some people will spend $100 and get $10,000 worth of payouts from one account. Also, you can have multiple accounts. So not only could you leverage $100 to get $2,000, you can buy multiple of these $100 accounts, copy trade them together, and leverage multiple accounts to make more. So if I make $500 across one account, that's $500. But if I make $500 across 10 accounts, that's $5,000. And you could do that. You can go up to probably like 40 different accounts. Okay. Obviously, that's way harder than it seems, but that's an example of that. And also on some of these prop firms, you have a path to live. A path to live basically is the prop firm gives you the ability that if you are good enough, they'll give you a real live account so you can trade the real markets, and you can scale this account as high as you want. So what are the cons? Well, it's harder than it sounds. I told you the statistic that only 10% of people actually get payouts once they pass the accounts. But not only that, only 3% or under 5% of people in the world after 365 days are actually profitable in trading in general. Now, because of the leverage, you could be worse and still be profitable, but it's still, again, trading is a hard game, right? Fees add up. Yes, these prop firm fees add up. Now, let me explain to you what happened to me when I started trading around a year and a bit ago. I decided I want to go straight into the prop firms right away because I had a little bit of money to burn. Yes, I burned the money. It is the truth. I burned the money. I would buy $100 accounts and I would blow the accounts, and I'd buy $100 and I would blow the accounts and blow the accounts, blow the accounts. Now, obviously, I've gotten better and I've taken payouts. I can slow down because I'm not really blowing these accounts. I'm having these accounts for a longer period of time, so it costs less. But when you start and you're blowing accounts and you're only doing evals, it costs a lot of money. It is emotionally taxing. The whole point of a prop firm is that they want to take control of your brain. They want to make it so it's harder for you to trade your normal style. They want to make it so it means more when you lose. They want to make it so you can't stop because it's so good. Basically, it's like a bit of a casino. You do not want to be stuck in the casino with an infinite bankroll because you're going to blow the infinite bankroll. Now, the emotionally taxing part is the fact that you can go 6 months of trading, because trading's hard. You can go 6 months of trading and not even pass a single account. And then you'll be sitting there and you'll be like, damn, I didn't pass a single account. I should quit now. And then once you quit, that's what they want. They want you to quit. And then you'll never get that money back. If you are good enough to keep going and you don't quit and you get better, assuming you're actually getting better and you can actually take payouts, you're eating back what you lost from these prop firms, and that's what they don't want. So what are the best prop firms in the industry? Lucid Trading has the cheapest, best accounts that I'll go into later. Tradeify has really great accounts, and Alpha Futures have some amazing accounts as well. They all run discounts. I don't have a discount code. If I do have a discount code, it will be down in the description down below. Or try code Von John, because if I do get a discount code, that's going to be my code. If that doesn't work, then go ahead and use anybody else's discount code. They will give you the best discounts on the firms for that specific sale. So if there is a 50% sale on Lucid accounts, whatever code you put will give you 50% off. Anyways, these are the best prop firms in my opinion. If you're a starter, beginner, or even intermediate, these are the prop firms you should stay with until eventually you scale up past these prop firms. But that's probably a long time from now. Now you know the prop firms, what exactly accounts do you buy? So there's two types of accounts. There's these safety net accounts that have 1 day evaluations, but in the funded, you need to build a buffer before taking any profits. And there's a 50% consistency rule. A consistency rule basically means that you can't make more than 50% of your total balance from one trade. Personally, I don't like this rule because there are times where you're going to have a trade that goes, absolutely berserk. You'll make 70% of your consistency, and then you're like, oh shit, now I need to make more money to take a payout. It doesn't make any sense. Personally, I stick to the 0% consistency accounts, which are the next ones. No consistency in funded accounts. These are 2 days to pass. See, that's where they get you. It's not 1 day to pass. It's 2 days to pass minimum. And there are now there's no consistency in the funded stage, and you withdraw 50% of the total balance after 5 winning days. The only difference between the safety net accounts and the no consistency accounts is the safety net accounts, you have to build a buffer. It's like mandatory, and the 50% consistency rule. But you can take out all the money past the buffer. In the no consistency accounts, you have to basically make like 2 times the amount you want to withdraw at any given point. So if you want to withdraw like 6 grand, you have to make 12 grand. Okay, depending on your accounts, whatever. And you have to do that after 5 winning days. So the best no consistency accounts are the Lucid Flex. They're 2 days to pass, 2K max payout, and it scales with you as you get payouts. So it goes from 2K to 2.5K, and I think it keeps going after that. And then this is the second best account, and the account that I actually like the most is the Alpha Futures Alpha Premium 2 days to pass 3K max payout, which scales with you as well. I got my $7.2 thousand payout that I got last week from Alpha Futures. It paid out very quick, and I think it was a great addition. Then there's the Tradeify Select. These are 3 days to pass with a $3,000 max payout, and they scale. In my opinion, if you are a beginner, the cheapest account is the Lucid Flex. And like I said, use a discount code. Do not go into the checkout without using a discount code. Whether I have a discount code, whether it's code Von John, that it doesn't exist yet, maybe I'll get one. Or you see your other favorite trading influencers discount code, use a discount code so you can get a discount. There's no reason not to use one because you want a discount anyways. So use your favorite influencer or use mine if I end up getting one. Check down below if I end up getting one. It doesn't matter. It doesn't bother me. I don't care. Use any discount code as long as you're getting a discount. So now we're going to get into the prop firm approaches. This is the sauce. This is the sauce that I need to be teaching. So the beginner prop firm approach is get on the charts every single day and risk $200 per trade. The goal is to put your strategy to the test, not to chase the results. You want to focus on getting max screen time and real trades without burning through evaluation fees. Like I said, evaluation fees are the only downside. So as long as you can stay on one account for a long period of time while you are learning, it is worth it. You do not want to be spending $10,000 to learn how to trade. You want to be spending as little as possible. You're not even focused about getting a payout. Matter of fact, the idea of getting a payout does not even enter your consciousness. You just want to be on the charts at 9:30. So this is the stage where you build a feel for the markets and the emotional stress that comes with live trading. Now, you could backtest anything you want in the world. You can backtest any amount of data, 10 years of data. Nothing beats live trading. Live trading by far has made me so much of a better trader. I used to backtest and I would find that, yes, I was good on backtesting, but when I would get to the live markets, the emotional toll or the stress or the idea of losing would take over my body. All I did was sit, I stopped backtesting. All I did was get on the charts every single day, take my trade and get off, take my trade and get off, take my trade and get off, for months. I did that for months. And then finally, I felt a little bit better about loss. Every time I lose now, I don't care. I don't care if I lose because I know in the long run, it'll be better. Okay, then you're going to stick to $250 risk per month. Then you're going to stick to around $200 to $250 risk for a month before even trying to think about scaling up, right? And after that period, dial it up to around $500 risk per trade. Now, I'm only recommending dialing it up to $500 risk per trade when you're around a month, 2 months, 3 months in of trading the live markets, because of the fact that $500 risk per trade is when you're going to start passing your eval. $250 risk per trade, you could still pass your eval. It's just going to take you longer. $500 risk per trade, it'll make you pass your evals quicker, but it also can make you blow your accounts. So that's why I recommend do not do it unless you are willing to start passing the account. So at $500 risk, aim to pass the account within 2 weeks. Now, if you can't pass the account within 2 weeks on $500 risk, I would assume you're not good enough at trading yet. All you need to do is pretty much win like 6 1-to-1 trades or 3.5 2-to-1 trades. So that's like kind of like 2 weeks is pretty good. I would assume you're able to do that. If you're not able to do that, dial it back down. But if you are, at this stage, the only thing that matters is being in front of the live markets and testing your strategy. If you blow an account, it's all good to dial it down, go back to $250 per trade, and just focus on testing your strategy. Use this beginner approach if you've never gotten close to a payout before. If you are someone, okay, who's never gotten a payout, who's their first firm, maybe their first month trading, why are you trying to go for a payout? There is absolutely no point. You need to get a feel for the markets. You need to get a feel for these prop firms. You need to understand the risk to reward of what you are trading. And in order to do that, you need to be going through this beginner approach. You do not want to be focused on the outcome. You want to be focused on the inputs, not the outputs, the inputs. And so if you are a beginner that has never gotten close to a payout, has probably not even passed the account, just take this approach. If you end up passing your account using the beginner approach, once you get to the funded stage, from the beginner approach, repeat what I just stated. Risk $250 per trade. You want to get the feel of being on a funded account and get the emotions out. When you're on a funded account, and it's going to mess with your brain. You're going to be like, wow, I finally did it. I passed an evaluation. I'm on the funded stage. This money actually means something to me. You want to get the emotions out because the truth is the money does not mean anything, but seeing you lose a $250 or $500 or $1,000 of drawdown on the account is going to hurt. It's going to hurt a lot, especially the first few times you do it. So that's why I say do $250 per trade. Hold that account as long as you want. Hold it as long as you want. And then once you get the emotions out, you'll feel so much better. And realistically, you'll blow many accounts before finally getting your first payout. That doesn't matter. Rinse and repeat this approach until you finally feel that your strategy is working, and hopefully you get in a payout on the way with this beginner approach. And I wouldn't scale up to the next approach unless you get your first payout or your second payout doing this approach. So now we're on to the advanced approach, and it's very risky, okay? Because it's advanced, right? I'm willing to blow accounts. I'm willing to risk a little bit heavier because I'm confident in my strategy. I'm confident in my ability to take an A+ setup, and I'm confident that every time I take a good trade, I'm attributing to a winning statistic. So on the advanced approach, you want to, on the eval phase, risk the whole drawdown every single day and aim to pass the consistency rule, which is 1,500 times 2 because of the 50% consistency rule. Basically, if I don't get $1,500 on the account within that day or within 2 days, I'll pretty much just blow the account. Now, I'm not saying that I'm going to gamble the account away if there's no trade. I'm saying that if I see a trade that I'm willing to take, I'm going to risk heavy on it, and I'm going to make sure that I take good trades until I blow the account. Does that make sense? So if I'm taking one good trade and I'm risking $2,000 and I blow the account, that's fine. I'll just load up another account. Usually for me, it's kind of impossible to risk around 2,000 per drawdown. Usually for me, it's around like 500. But since I trade a higher risk to reward, a $500 risk is pretty leveraged. And so I will do this 3 times or 4 times in the day. And if I blow the account after all that, it doesn't matter. I'll just buy another account. But the goal here for me is to pass the account within 2 days. And I want to make it so that I'm basically sizing heavy on trades that I think will work and that I would have taken in the funded anyways. Now, it sounds like a bad risk management, but I have a high pass rate because I'm only taking these A+ setups. These A+ setups to me are around, for my strategy at least, around 55 to 70% win rate over a few hundred trades. These A+ setups work more than they don't. So why would I not be risking heavy, especially when the funded stage, the evaluation stage does not actually matter yet? Right? I can't realize any of these profits. I want to get out of these. I want to get out of this as fast as possible. So if you did go through the motions of trading at small size and being on the charts every single day, you'd see your strategy wins more than it doesn't, hopefully, unless you trade low risk to reward. Hopefully you've developed a strategy that actually works, right? You watch a few videos on YouTube. You see a strategy that works. You do it. You did it on the beginner approach, but now you're on the advanced approach. You're going to see like, wow, my strategy actually works. So you just need to risk heavy, right? Because whether you risk 500 or you risk 2,000, it doesn't matter. If you're risking heavy, the trade doesn't change, the risk does. That's it. That's all it is. So if you can, contribute to your winning statistic, and let's say you get a winning trade of that statistic and you pass your account, there you go. Now, this approach allows me to get past the evaluation phase quickly, but also I don't want to be blowing accounts gambling. Like I said, I'm taking A+ setups only, right? I'm not just because I'm sizing heavy. It doesn't matter. Because I'm sizing heavy, doesn't mean that I'm not taking A+ setups. I'm taking A+ setups. Then on a fresh funded account, I do almost the exact same thing. So once I pass the evaluation phase, I do pretty much the exact same thing. I risk $1,000 in the account until I make $2,000. Meaning, if I have a fresh account with zero funded money made yet, I want to get past this fake buffer, okay? This fake buffer I have for myself is around $2,000. That's when the end of day trailing drawdown stops trailing you. So I risk $1,000 until I make 2,000. That means if I lose 2 days or 2 trades, depending on how big my stop loss is, I'll blow the account. For me, that's fine. I have a high pass rate. I'll get back to the funded stage quickly, and then I'll be able to try again. And then once I get past this, my goal is to try and build a quick buffer so I can focus on taking payouts easily. And the reason this works is because after $2,000 is made, I just dial back my risk. I make $500 per trade until I get my last few winning days and I take a payout. So I'll make $2,000 in the account, risking heavy. I'll dial it down to 500, maybe 300, depending on how I feel. And I'll make $500 or 1,000 or whatever I'm making, or 300, whatever it is to appease the winning days, maybe a bit more, maybe a bit less. And then I will end up taking a payout, or I'll just keep the account going to try to build a bigger buffer so I can get a larger payout in the future. And that's what I did for my $7.2 thousand payout. I got the accounts to 5,000. I could have taken a $2.5 thousand payout, but instead I made 500 more so I can take a $2.5 thousand payout, but have more drawdown for the future. At the end of the day, on a funded account, if you're risking heavy, you only need 1 to 2 real good trades. Now, when I say real good trades, you need 1 to 2 perfect A+ setups that you would take with all your life and risking heavy. Because if you risk heavy on one trade and you make 1,000, and you do it again and you make 2,000, that is exactly what you want. Okay, you want to be risking heavy on A+++ trades, the ones that if they fail, you'd be like, man, the market's just against me today. You know, because if you can take those trades on your sim funded, you spent $100 on your account. Okay, you passed it, depending on how many tries taken you to do it. Now you have $1,000, $2,000 worth of drawdown. The second you get to that $2,000 mark, your profits are pretty much almost in your hand and you can realize them quickly. So why does the advanced approach work? The advanced approach only works because of the nature of the leverage prop firms give you. Now, this is why it works. The leverage, when you buy an account for $100, you can only lose $100 if you blow it. But the downside cap is, your downside is capped at $100 while your upside is around a max payout of $2,000, $3,000, maybe even $4,000, depending on the accounts you buy. And that means that if I blow the account, I'm only losing $100. Now, I don't want you to go in your head and be like, wow, it's only $100. Let me blow 25 accounts. No, I want you to be treating like it's $2,000. But when you take a loss, knowing it's only $100. Okay, and this allows you to beat the odds. If I take a max payout, I can blow 20 accounts. But if you get one max payout, you pay back for all those losses. Now, I don't want you to look at that and be like, wow, trading prop firms is a statistic you need to beat. I just need to beat the odds. Da, da, da. I wrote that there to make you understand that if you get a max payout, you get 20 accounts worth of failure. Okay, so when you are risking heavy, if you have a positive win rate, you can blow 5 of these accounts. But if you get a max payout one time on the 6th try, you're paying back for your 15 accounts in the positive. And you just want to keep doing that. And you want to keep scaling like that. I said scale. How do I scale? Right? How do I scale? This is one of the important things. These are things I'm going through right now. I have 3 accounts right now that I took large payouts on. I've added 3 accounts to my stack. But I want to scale. I want to scale quickly, but I want to scale efficiently, and that's the most important part. What I do is 1 payout equals 1 account method, okay? I made this method up. No, I'm joking. I don't know who made this method up, but I've seen this online somewhere, and it completely made sense because the math checks out. Once you get your first payout, you buy accounts until you pass 1, okay? 1 payout equals 1 account. So you get your first payout, then you buy a 1 account, okay? Or until you pass 1, so until you add 1. So if it takes you 4 attempts to pass 1 account, just do it, right? You're gonna spend $400 or $500, whatever it takes you, pass that last account. Okay, so now you have 1 account and 1 account. Now you have 2, right? Then repeat the advanced approach. You go through the motions. You risk heavy on that fresh account, blah, blah, blah. Now you're gonna have 2 accounts. And then once you get a payout on those 2 accounts, you're adding 2 more. And then you have 4, you're adding 4 more. Now you have 8, you're adding 8 more. That's assuming you get a payout on every single one. Now, the odds are your accounts are not going to be in sync, and your first account will get more payouts than your second, third, fourth, fifth account. So let's say you get a payout on your first account, just add 1 account. Don't add 4, don't add 6, just add 1, right? So for me, I have 3 accounts. I took a payout, I added 3. I blew these accounts. Now I'm waiting until I end up getting a payout back on these 3 accounts so I can add 3 more. What do I do once I copy trade? Once I want to copy trade past the firm's limit. So prop firms usually do 5 accounts for their limit. Apex has 20. Some prop firms do 3 accounts. Now, in order to copy trade across multiple firms, you're going to need I wrote the wrong thing. I wrote best prop firms, whatever. Best prop firm copiers. You're going to need a trade copier. Basically what it does is it emulates what you do on one account across many different accounts. So the one I use is Tradecopia. It's the best one in my opinion. There is TradeSync. It's a bit different. Tradecopia is a web app, and I think TradeSync is based on the cloud. The web app is a bit more reliable, so just go with Tradecopia if you get to this point. You don't need this if you're not at the point of scaling, but it's just good to know. You should write this down. And if you have any questions, join the bubble. It's my free trading Discord. Okay, it's free. All right, I'm gonna be doing trade reviews, trade recaps, talking about my trading, posting YouTube videos. We're gonna have conversations. So feel free to ask questions in there or in the comments down below. I'm gonna be answering everything you'll need for trading, whether it's discount codes, whether it is my Discord community, whether it is my Instagram. Okay, it's gonna all be in the description down below. So if you guys did enjoy this breakdown of how to trade prop firms, go ahead and hit that like, subscribe, and come back for more, baby.